Momentum. Sir Isaac Newton first described it in 1687 as the quantity of motion of an object, a groundbreaking concept documented in his legendary work, Principia. For centuries, Newton's insights have shaped our understanding of physics and even inspired metaphors in other fields, like financial markets. Terms such as momentum trading borrow from Newton's laws of motion, suggesting that once an asset builds momentum, it tends to keep going, until, inevitably, it reaches a tipping point or reverses course. By the numbers, silver should be trading at much higher levels. Supply is tight and getting tighter, while demand continues to climb with no sign of slowing down. Yet among one critical group, retail buyers of physical silver, the momentum has waned over the past couple of years, but change may be in the air. Recent signals suggest that silver's next big shift in momentum could arrive as early as 2025, reigniting enthusiasm among silver bugs and potentially reshaping the market. If you enjoy fresh content each week on metal markets, global news, and how it all ties together, hit that subscribe button. Keep us going. Your support means we can continue bringing you untold stories each week. Thank you. Silver has been a strong performer over the past year, but if you skim through the comment sections on social media, you might think it's been a colossal disappointment. Year to date, silver is up 24%, and earlier this year it was up nearly 44%. It has easily outpaced the Dow and consistently outperformed the S&P 500 for much of the year. This isn't an isolated incident either. Over the past 5 years, silver has offered countless opportunities for wealth preservation and profit. The pandemic amplified its appeal, with stackers and investors of all kinds singing its praises. Yet, despite its stellar performance, two curious trends have emerged. First, disappointment among silver stackers is increasingly evident in conversations about its price. Second, while silver is undeniably doing well, there's a lingering sense that it should be doing better. A closer look at the data reveals why expectations and reality seem at odds. According to the Silver Institute, mine production has been in decline for years, a trend unlikely to reverse anytime soon. Meanwhile, demand continues to rise, and the market is grappling with a staggering deficit of 1.1 billion troy ounces since 2019. The early days of the pandemic brought a surge in demand for physical silver. From 2019 to 2022, net physical investment in bars, rounds, and coins skyrocketed, with annual demand climbing 80%. But this surge was unsustainable. In the years since, demand has dropped significantly, from a high of 337 million ounces to an estimated 212 million ounces by the end of 2024. That's a steep 37% decline from the peak, signaling a shift in momentum. Silver's trajectory waxed, but now it seems to have waned. There is a story to be told to understand why the shift happened, and then another story to show why we think the momentum has a unique opportunity to swing the other way in 2025. By now, most investors have probably relegated the GameStop short squeeze to a corner of their long-term memory banks and think of it infrequently. A quick refresher is in order. A large group of Redditors teamed up to buy GameStop stock, forcing hedge funds to cover their calls on what we could charitably refer to as risky short selling. Ultimately, the hedge funds paid for their greed while retail investors hit payday. This frenzy spilled over into other areas, with altcoins, meme stocks, and speculative ventures popping up seemingly overnight. Investing, for a brief moment, was seen as the next get-rich-quick scheme. Amid this chaotic environment, silver briefly entered the spotlight. Building on the renewed interest it had gained after COVID-19, silver became the subject of its own short squeeze attempt. A month after GameStop's meteoric rise, Wall Street Silver, a Reddit community inspired by Wall Street bets, emerged with a bold mission: to orchestrate a silver squeeze. Headlines trumpeted the movement, and for a time, retail investors imagined silver could replicate GameStop's astronomical gains. Mainstream outlets like the Wall Street Journal and the New York Times joined the buzz, fueling speculation that silver was the next big play. The timing seemed perfect. The world was grappling with record inflation, pandemic-driven economic disruptions, and heightened geopolitical tensions. As so often happens with speculative frenzies, when quick gains failed to materialize, enthusiasm waned. Silver didn't launch to the moon, and attention drifted elsewhere. As retail investors moved on, physical demand for silver began to decline annually. This retreat in retail interest revealed an important truth. While physical silver investment can significantly influence momentum, it's not the primary driver of silver demand. Industrial applications dominate, accounting for 74% to 83% of silver's total demand in recent years. Silver's metallurgical properties, unmatched reflectivity, conductivity, antibacterial qualities, and essential applications in the green energy sector make it irreplaceable in industries ranging from electronics to solar panels. Yet retail demand remains a wild card, capable of reigniting silver's momentum when conditions align. And 2025 is shaping up to be a year where those conditions could converge. The first clue lies in a groundbreaking announcement from Russia's central bank this past October. Like all central banks, Russia maintains a strategic reserve filled with assets such as gold, foreign currencies, and other valuables. Now, for the first time, Russia is adding silver to its state fund. This development could be transformative. Central bank gold buying has been a major factor driving gold's record-breaking price surges in recent years. If Russia's decision to stockpile silver marks the beginning of a similar trend, it could create a powerful new demand driver for the metal. Russia isn't alone in viewing silver as a strategic asset. China, a close ally and partner in de-dollarization efforts, has spent years quietly amassing silver through an intricate network of miners and refiners. By purchasing silver below market prices and bypassing global exchanges, China has built a strategic reserve of its own. Given its alignment with Russia, it wouldn't be surprising if China also formalized silver holdings in its reserves, especially when doing so aligns with its broader economic and geopolitical goals. While Russia's budget reveals an intent to expand its precious metals holdings aggressively, concrete details remain sparse. However, this new source of demand is now firmly on the radar, and its impact could be significant. Adding to the optimistic outlook for 2025 is the growing confidence among silver investors. A recent survey found that approximately half of retail silver investors believe silver will surpass $40 an ounce by 2025. If this sentiment reflects the broader silver stacker community, it could signal a resurgence in retail demand, a potential catalyst for silver's momentum to accelerate in a bullish direction. For silver, momentum has shifted before, from explosive growth to periods of waning enthusiasm. Yet the conditions for a renewed surge may be forming. From shifting investor sentiment to unprecedented central bank moves, the pieces are aligning for 2025 to potentially mark a pivotal year for silver. Just as gold has crossed the Rubicon and we may never see $2,000 an ounce gold again, a moment is coming where $30 silver will be hindsight. The question isn't whether silver has momentum, it's whether this moment represents the pause before the next powerful move forward. Will silver stackers reawaken? Will industrial demand continue to climb? And could central bank buying light the fuse for silver's next great run? Only time will tell. But what do you think? Share your thoughts in the comments below. We'd love to hear from you. And that's all we have for you today. Please remember to like, subscribe, and share with a friend. Thanks for watching, and we'll see you next time.